Ladies and gentlemen, good day and welcome to Q4 FY24 earnings conference call of Capri Global Capital Limited, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pramod Shettikar from Capri Global Capital Limited. Thank you, and over to you.
Good morning, good afternoon, everyone. This is Pramod Shettikar, Senior Vice President at Capri Global Capital Limited. I shall read out a brief disclaimer for today's call. The discussion on today's call regarding Capri Global Capital Limited earning performance will be based on judgment derived from the declared result and information regarding business opportunity available to the company at this time. The company's performance is subject to risk, uncertainty, and assumptions that could cause actual results to differ materially in future. Given this uncertainty and other factors, participants on today's call may observe due caution while interpreting the result. The full disclaimer is available on slide number 41 of Q4 presentation. Participants are requested to take note of the same. We have Mr. Rajesh Sharma, Managing Director of the company, Mr. Partha Chakrabarty, CFO, and Mr. Sanjay Srivastav, CRO, over the call today. I may now request Mr. Rajesh Sharma, Managing Director, to present the opening remarks.
Good afternoon, friends. Let me start by wishing you all a happy Akshaya Tritiya. We declared our audited consolidated results for Q4 FY24 on Wednesday, 8th May 2024. I hope you had a chance to go through the investors' deck. I would like to start by highlighting a few key decisions that our board approved in its latest meetings. CGCL's board in the meeting dated 29th April 2024 has appointed Sri L.V. Prabhakar, Independent Director and Chairman of the Board of Directors. Sri Prabhakar, a career banker and former MD and CEO of Canara Bank, was appointed to CGCL board in January 2024. The Board of Directors approved dividend at the rate of 15% on the face value of ₹1 for FY24. This will be payable on CGCL's enhanced equity base after the recent split from ₹2 face value to ₹1 face value, as well as the bonus in the ratio of 1:1. As a result, CGCL's outstanding fully paid-up equity shares have increased 4 times from approximately 206 million equity shares in Q4 FY23 to approximately 825 million equity shares in Q4 FY24. In the light of recent split and bonus issue, the EPS and book value per share for the past quarter has been suitably changed to make the values comparable. You may please take note of the same wherever the values appear in our earnings releases. I shall now turn to the commentary on business and earning performance. So, as far as business is concerned, please refer slide 4, 5, and 6. During FY24, we crossed the major business milestone with the AUM crossing rupees 150 billion to touch rupees 156.5 billion. This was a second consecutive year of 50% AUM growth. We are well placed to drive growth and achieve the targeted rupees 300 billion AUM by FY27 as stated earlier. As guided, our gold loan AUM increased to 3.1x Y-on-Y to cross the rupees 30 billion AUM target. The gold loan AUM, including co-lending AUM, stood at rupees 34.9 billion in March 24. The milestone in gold loan business was achieved in just 20 months of launching the business. Momentum continued in a strong manner. The share of gold loan AUM was 37% and the share in disbursal was approximately 50% in Q4 as well as FY24 respectively. The number of exclusive gold loan branches was 750 as of March 2024. If we talk about one of our key growth drivers is MSME, our AUM have grown to 5,017 crore, and which is growth about 15%. If you talk about the construction finance disbursal, which is remained during the range bound in Q4 FY24, driven by the existing sanction pipeline, the AUM share of both CF and indirect lending together stayed about 20%. The commentary in CF business remains unchanged. The business continues to be supported by a strong outlook for residential real estate in our key geographies like Mumbai, Ahmedabad, Pune, and Bangalore. The competition amongst lenders for quality projects is intense, although we have seen some return of pricing power. In construction finance, we will remain guided by our cautious risk management strategy of keeping its mix at or below 20% of consolidated AUM and remaining focused only on residential projects in the affordable housing space. Our co-lending AUM continued to surge during Q4 FY24, increasing to 11.7% of AUM compared to 8.9% in Q3 FY24 and 5.3% in Q4 FY23. We have gone through a learning curve since commencing co-lending 2 years ago. The acceptance ratio of loans with our partners banks is now significantly higher than a year ago. With new technology being put in place, we see momentum in co-lending continuing. If we talk about housing finance, our book have grown about 52.8% from previous YOY from 2,666 crore to 4,073 crore rupees. And home loan will continue to grow in coming years also in the range of about 30% plus growth rate. And we clearly see a strong traction happening on ground there. Now I come to the earnings. Let me first start with the core earnings. Our spreads were stable at 6.4% for the second consecutive quarter. The increase in marginal cost of funds was more than offset by an improvement in yield on advances. The net interest income or NI during Q4 FY24 increased 4% quarter on quarter and 36% year on year. On a full year basis, the NI increased 55% year on year. The non-interest income performance also exhibited a strong momentum across key income lines. It increased 10% quarter on quarter and 25% year on year Q4 FY24. On a full year basis, the non-interest income increased 41% year on year. The share of non-interest income in net income was 31% in Q4 FY24 and 28% in Q4 FY24. The share of non-interest income in net income is settling about 30% in some of the changes we affected to the car loan distribution commission Q2 FY24 and co-lending income recognition during Q4 FY24 stabilized. With AUM momentum continuing to be robust and new insurance fee income expected to begin contributing in FY25, we expect the non-interest income performance to continue in a strong growth trajectory. The cost-to-income ratio reached 70.5% during Q4 FY24. This was majorly due to strategic investment in expanding our team and implementing impactful marketing initiatives. We will be able to significantly reduce this ratio. A result of higher quarterly OPEX, the pre-provisioning operating profit declined 16% quarter on quarter, rupees 1,096 million, but was up 22% year on year. On a full year basis, the pre-provisioning operating profit increased 37% year on year. I come to the asset quality now. Our GNPA ratio declined 18 basis quarter on quarter to 1.92%. With the PCR on GNPA, it stood at 43.2% and the net NPA ratio declined by 28 basis quarter on quarter to 1.1%. As regards profitability and outlook, we have reported a net profit of 826 million, which is high 27% year on year and 26% quarter on quarter. Excluding the loss incurred in the gold loan business, our net profit would have been rupees 885 million. We reported 2.3% ROA and 8.7% ROE in Q4 FY24. Our earning performance during Q4 FY24 can be termed as being very resilient. Our efforts in diversifying our business and income streams over the past 2 years are now beginning to support us meaningfully as seen in Q4 FY24. We have coped up with a decline in spreads and increase in credit cost for 2 consecutive quarters, but reported a stronger bottom line. Now I come to the technology and ESG initiative. FY24 has been a year of innovation and transformation. Technology has been a critical area of focus for us, where a number of initiatives have gone live, including our in-house developed LOS, FlexCube, LMS, developed by Oracle, collection module, process reengineering, analytics-driven decision-making have been implemented. This tech initiative will improvement in turnaround time, especially for MSME and affordable housing business loan through technology now, which is new LOS and LMS, leading to improvement in sales productivity, Optimized cost reduction in per file processing and risk-based pricing enabled by credit decisioning scorecard drive improvement in the net interest margin, which should be visible in the first half. Capri is in the process of establishing systematic ESG practice internally, has crafted policies required in the ESG guidelines. We are currently in the process of obtaining ratings from global agencies. Furthermore, we are conducting training for our internal teams and aligning our business processes with ESG requirements. Going ahead, we shall periodically keep our stakeholders updated on the progress we make on ESG assessments. We look forward to regularly sharing quantitative outcomes of our tech initiative over the next few quarters. Capri loan continues to be a great place to work, certified for the third year in a row. With that, I conclude my remarks. We shall now take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Satya Prakash Pandey from Haitong. Please go ahead.
Hi, good afternoon. Thank you for the opportunity. I had just one question. With the introduction of the new RBI regulation on gold loan, what operational challenge do you foresee on your branches encountering? For instance, do you anticipate an increase in TAT or a potential shift of customers back to the informal segment, considering that many from rural areas, specifically women borrowers, may not have bank accounts?
So I believe that after a Jan Dhan account, there is no customer or as such which we come across which are significant numbers who do not have a bank account. I think this cash circular on the cash disbursement in excess of 20,000 has been clarified by RBI that NBFC should not have done it. So I think all NBFC will not be doing it. I do not foresee any challenges in that by the volume shifting back to informal segment, because most of the time this cash disbursement are being facilitated to the BT transaction. So I think when everybody in competition following the same norm, customer will have no option but to take their disbursement in their bank account. And today everybody have a bank account. We don't come across any customer who do not have an Aadhaar or bank account. So I think we do not foresee any problem. Earlier, because everybody else was doing, some of the players were continuing doing it. But now common norms have been stipulated. So I clearly see that the customer will also fall in line.
Okay. Thank you so much. That's it.
Thank you. The next question is from the line of Aman from Dolat Capital. Please go ahead.
Hi, sir. Hello.
Yes, we can hear you. Please continue.
So regarding the previous question, the analyst has asked, what % of your gold AUM is cash dispersal based?
So it is very difficult to point out that what percentage, but I can say that there was no disbursement happening which is purely cash. And after the guidelines have been issued, we have already stopped the disbursement in cash. And we can see that despite that, the volume has not dipped. And we can give an outlook that the first quarter result, when we again meet sometime in July on the call, you will see that despite that gold loan disbursement stopped in cash, volumes have gone up. We have seen in the March, we are currently seeing this. So we don't see any dip because of that.
Okay. So let me ask that what is the share of about 20,000 the average ticket size? Like what will be the share of cash transactions? Like, I want to understand. Like, for example, if you say the more of the transactions are BT based, so can you give just a ballpark number regarding that? Like,
I think giving a ballpark number would be difficult. But going forward, the less than 20,000 rupees loan will be less than 10%.
Less than 10%.
Yes.
Okay, so it is like close to the BT number. Like, can I know what is the BT number?
No. So it is not the BT number you can specifically say. When you are disbursing the loan in the bank account of the borrower, you do not know whether he has already repaid that loan out of his own funds and what. It will be difficult to point out.
Okay, so this less than 10% is about 20,000, right?
Yes.
Okay, and you have no clarity with respect to percent of gold AUM which is cash based, right? Which?
No, because that is not how you tag in the system, no.
Okay, got it. And I have other two questions, like if I may proceed. Can you provide a brief overview of the robust housing outlook, considering the underlying demand in real estate across different geographies? And do you anticipate that we will be able to accelerate the growth of our housing business significantly in response to this demand? And will we enter new micro markets as well?
So if you see the housing demand, which is we are in the affordable housing segment, and you will see even the incremental 90% demand, the number of units is still coming from affordable housing, not value-wise but number-wise. If you look at the data of various bureaus, rating agencies, even NHB data and other data, clearly it is a huge demand. So if you are seeing last 3 years, we have grown significantly. Last 2 years of growth has been in excess of 50%. I think next 4 to 5 years we will continue to grow 30% plus in housing finance, and we will continue to add the branches. This year we will add some of the branches maybe in the UP, UK. That plan is under discussion. But yes, every year we added the branches and we will continue to grow the 30% plus space in the housing finance.
Okay, so can you give me the what is your targeted branch plans for housing? How many branches you want to add for this year?
So that plan is yet to be frozen. In the first quarter, we'll go to the board and again then we have to take all the other approval. But on an average, we have keep adding 20 to 30 branches every year.
Okay, 20 to 30 branches. Is that right? What I heard. Okay. And regarding this car loan business, which we have seen a very good growth trajectory, but this quarter we have seen a slight downturn compared to Q3. So is there any specific reason for this decline, and what sort of growth are we anticipating for this business for FY25?
So FY25, we should see a growth of about 20% in the overall volume. But the coming year, we are going to add another business vertical, is the used car finance. And that business vertical will take about 3 to 6 months to set up and start, and the second half we'll see some volume happening. So I think next year onwards, with used car finance and new car finance, we'll significantly see the enhanced profitability. And as you know, it's a pure fee income play. We do not take any underwriting risk. We don't provide any capital here. And this entire business has been shifted to the new company called Capri Car Tech Platform Private Limited, which is 100% subsidiary company. All the business related to car is going to be there. We see a significant development and technology initiative in this company to garner the business in anything related to the car. As you see, even currently today, in the corporate DSA who are not dealers, we are the number one pan India, and we are having a dominant position in this space.
Okay, got it. And if I missed the earlier commentary, like why was there is a dip in this quarter? Like,
so there is a slight dip. Maybe because of 1 month there is a lesser volume, plus we are in the process of shifting our codes from the CGCL to the new entity. But if we look at it like this, the Q3 also we have done the good numbers. And Q4, the numbers are similar to that Q3 number, not that big. It may be a dip of marginal 1%.
Okay, it's like more of a process issue, right? Like,
yeah, but you cannot say the dip because we have done about 2,800 crore in the Q3 and we have done 2,761 in the Q4.
Okay, sir. Thanks for the answer.
Thank you.
Thank you. We'll take our next question from the line of Romil Savalia from Concept Investwell. Please go ahead.
Hello. Yeah, hi sir. Good afternoon. First of all, congratulations on a good set of numbers. So, sir, I heard.
Sorry, Mr. Savalia, may I request you to use your handset mode, please?
Hello. Am I audible now?
Are you using your handset mode?
Just a minute.
Yeah, please.
Hello.
Yes, please go ahead.
Yeah, hi sir. Am I audible now, ma'am?
Yes.
Okay.
Thank you.
Good afternoon, sir. So, sir, I have a couple of questions. So, let me start from the first one. So, if you see our cost of funds been increased by 50 basis point approximately in last few quarters, right? And our yield has been remaining same so far. So it is actually impacting our NIM. So is there any specific reason why we haven't been able to pass it on to the borrowers? That's the first one. And second one is the on a technological initiative expense side. So what would be the total expense we attributed on the technological side in FY24? Yes, sir.
Yeah, so if you talk about the cost of fund has gone up about 50 basis from the Q1 to Q4. And out of that, we are able to pass on partly that cost because some of the loans are semi-fixed in nature and some of the loans are on a floating rate. So that the loans which are on the floating rate get automatically reset at the higher rate, but the loans which are 3-year lock-in for the price, they have not been. However, our gold loan portfolio is increasing in the overall context, and gold loan pricing is higher. So the more and more gold loan overall AUM increases in the overall AUM, our net interest margin as well as the spread will continue to improve. If you talk about the last year, we have spent about 112 crore rupees on the technology and data science. And this is significant investment, and that is one of the reasons that our cost income ratio is quite elevated. But in the second half of the current year, we will see a significant difference in the TAT and resulting in the higher productivity and better volumes at a lower cost. So cost income ratio will start showing the improvement in the second half of the current year.
Okay, got it. Thank you.
Thank you. We'll take our next question from the line of Akansha from Matsya Capital. Please go ahead.
Hi, sir. Good afternoon, and thank you for the opportunity. I have a couple of questions around gold financing. Firstly, I wanted to get a sense of the competitive intensity in this space. I mean, given banks are extremely aggressive, still continuing to be aggressive here. So how are you see that tracking in the space?
So we are not aggressive because that is backed by the branch expansion. If you look at in about 15 months, we opened 750 branches. And then the branch opening has happened across every quarter. And every branch is giving us the AUM. I believe that this year we have closed a AUM of 5 crore rupees per branch. And next year we are targeting to close the AUM about 8.5 crore rupees per branch. Co-lending is also helping us in this space. In addition to that co-lending, we are able to get adequate lines, which is helping us to offer the interest rate to even those competing where otherwise you would not have another lower rate. So gold loan will continue to give a good amount of fee income because of the co-lending in the coming year.
Sure, noted on that. following up on the same, so how much of the growth this quarter, sorry if I missed this, but how much was it driven by, let's say, the tonnage addition versus the gold price benefit?
So you are asking how much was the growth in the current quarter, the last?
Let's break down across tonnage. How much was being driven by the real growth in tonnage versus the pricing addition?
So 10 tons over last 6 months.
So if we talk about last 6 months, as my colleague has told, that we have moved from 5 ton to the 10 ton. So, so while the tonnage will not reflect the pricing, but we will see the kind of volume it has gone up.
Okay. I have one additional question, which is on the housing bit, and this is not really specific to the quarter, but more of a long-term view that I'm trying to get a sense around, which is that India housing penetration is very low, 11-12% relative to other countries. But do you see India rural mix as being a challenge to its growth? What are the levers specific to Capri, and then how does it differentiate versus the industry itself?
So if we talk about as far as Capri is concerned, we are lending to the rural semi-urban customer where they do not have adequate income proof, and we are more in the semi-urban and rural areas. So our USP will be that how can we do underwriting which is better and faster and understand the customer need, tailor-made solution. And this is that now we have aligned our technology also. So the mortgage tech side, we have done a significant work in last 15 months. And as I said earlier, that this will reflect in the second half in terms of productivity and thus improving our cost-income ratio. So we have developed in-house collection module, which is very, very effective. We have taken the help of Boston Consulting Group to advise the entire process. We are using the automated AI-based selection of the calls to be made by the automated callers, and by optimally selecting where our field force should go, where our automated callers should happen. So there's significant work have happened on the housing finance side as well. So I believe that next year will be defining year in terms of all aspects of the way we are doing entire retail lending.
Okay, noted on that. Just one last question from mine, which is, what would be your outlook on cost of fund? Like, how do you see it tracking from here on?
So I think cost of fund age, we gather the impression of various commentary of the market and Reserve Bank and everything. I think cost of income should stabilize. The cost of fund should stabilize at this level. I don't see any further hike going forward. However, we expect that backed by the strong performance, in 6 months or so, we should see some rating upgrades. And if that happens, back of that, we should see some cost reduction in the cost of fund. However, we are now, the new lending, we are able to pass on the cost of fund. So net basis, the incremental lending will not have any the spread contraction. It has happened to a limited extent last year where we are not able to pass that on to our semi-fixed customer. But in the coming year, we don't see any hike. So clearly, there will be no much impact of the cost of fund account.
Okay, noted on that, sir. Thank you so much. That's all from mine.
Thank you. We'll take our next question from the line of Gaurav Sharma from HSBC. Please go ahead.
Hello, good afternoon. Am I audible?
Yes.
Yes, sir. Just a couple of questions. So first is, like, a few months ago, RBI raised concern in one of the gold loan NBFCs that there was some discrepancy noted in the gold loan quality or weightage when the gold is coming for a dispersal compared to the auction. So have you also come across any such instance, and if yes, then what are the corrective measures you have taken at your end? That is number one. And sir, also want to know your internal threshold of LTV beyond which you go for the auction of the gold. Related to that. And another question is related to housing finance. So recently RBI issued some guidelines where it has directed companies which are delaying the disbursement and charging the interest on the portion of giving check and the time when the check is actually issued to the customer, and the NBFCs are charging interest for that portion. So, have you also noticed such type of instances in your company? And if yes, then what would be the amount of interest you would be reversing? So these are my questions.
Yes, my colleague Capri will answer.
Hi, Sanjeev Srivastava here. I am the Chief Risk Officer. I think if I recollect, your first question is that what are the precautionary measures that we have taken with the difference in carat or weightage that you wanted to understand. So what we have done is that we are in continuous engagement with various regulators. We are in continuous engagement with all the departments, whether it is audit, business, and everybody, and we are giving a lot of training, workshops, and everything is happening. A notable thing that what we have done is that we have organized the training from the government's MSME skill development, and we have trained around 1,600 of our staff on valuation of gold. And it is a online training, it is a physical training where they teach you how to value a gold as well as they give you a certification. So now 1,600 staff of my gold loan team are certified by this training program. So since we are a lateral entrant into this particular gold loan, anyway my team members were like valuers. Valuers are like having more than 5 years of experience in valuation. They are from competition. They understand the gold loan business very well. So that has worked in an advantage, added with a fresh set of training for all of our employees, so which is going to take care of any kind of a difference in the gold valuation. Your second question was that at what level do we go for auction? So our auction happens on two counts. One is the plain and simple DPD, which is obviously post 90 plus, we go for auction. And the second point was that internally we also track something on a daily basis, which is called mark to market. So in that mark to market, we start giving notices to the customers the moment they breach 80% LTV. And once they reach at 85 to 90%, we do the auction. And if you can repeat your third question, then I can answer that.
So, yeah. So my third question was related to the housing finance business. So what was happening that some of the NBFCs were charging interest between the time duration they actually they are issuing the check and the amount when it is actually getting credited into the customer account. So for that portion, like 15 days, 20 days, they are charging interest. So RBI has asked them to stop such practices.
So basically, if you look at the business per se, there are some nuances where the customer, we take a disbursement request form, which the customer asks for the disbursement and then only be disbursed. Now, post disbursement in a housing kind of a scenario, there is something called registration. So the registration, they get a time or a token from the SRO, and which can be like a week, days, 10 days later. So that was the situation which the regulator wanted to curb. And so what we have, the action that we have taken is, even though we disburse it in the system on a certain date so that we are ready and the customer doesn't face any issue when his actual date of registration is coming by, but my interest charge will happen on the date I'm handing over the check to the customer. So in my system, I'm also building a button called handover button, and post that only my whole calculation will start. So that's how we are complying with the regulation.
Okay, so that means you don't have to reverse any of the interest till now, like in such cases. It has happened.
This has recently come up, and the only time which it took was more to do with implementation on system. So between this period, whatever we have disbursed, those will be far and few transactions, because as you know, April anyway is a very muted kind of a month for the business.
Understood, sir. Those are my only questions. Thank you so much.
Thank you. We'll take the next questions from the line of Manvi Rathod from Ventura Securities. Please go ahead.
Hello.
Yes, please go ahead.
Yeah. So my first question is, what is the average business for gold loan branch that we're doing currently? Hello?
Yes, stay connected, please.
Yeah. So if you're talking about the average AUM per branch is 4.6 years.
4.6. Okay. And what increase do we see going forward?
What was the next question, ma'am?
Yeah, I'm saying going forward, do we see any increase in the average business?
I'm sorry, Manvi, can you use your handset mode, please? It is not very clear.
Hello?
Yes. Are you on your
Is it
handset
better?
mode right now?
Yes. Is it better?
Yes.
Yeah, I was asking what is the average business per gold loan branch, and do we see any increase going forward?
Do you see any increase going forward? Yeah, definitely. As we mentioned, if you look at any of the housing, any of the gold loan business, and for any of our peers or competitors, you will see that I would say around 12 CR is the average AUM for branches, is what we understand from our study of peers and everything. Currently, we are at 4 to 5 CR, so we have a good runway to grow. And obviously, one is led by the growth in the same branches, and also if we open some more branches, then that will also add to my growth. But having said that, I think we have ample room to grow from my existing branches.
Exactly. Okay. And secondly, in our previous con call, we had mentioned that going forward from Q4, we'll be able to share some specific numbers on the insurance income on the segmental front. So, do we have any insights on that as of now?
So, I think right now we are yet to publish that, but we will come back to you with this number.
Sure. Okay. Thank you.
Thank you. Before we take the next question, we'd like to remind participants to press star and 1 to ask a question. We'll take our next question from the line of Akshat from Niveshaay. Please go ahead. Akshat, your line is unmuted. Please go ahead with your question.
Hello, am I audible?
Yes.
Okay. So, hello? Okay, so my question is that why the cost income ratio has inclined upward again this quarter?
So cost income ratio has gone up primarily because of the reason that some of the hiring have happened, and plus we have taken some marketing initiative, including the Capri car loans, where we have taken this partnership with the Gujarat Titan for the IPL and some other initiative. Plus technology spending is also impacting. As I said, we have spent up to close to 112 crore rupees in the technology side this year. So combined effect is that our cost income ratio has gone up. But I clearly see that after first half, we'll see significant technology spend going down because these lot of initiative will be come to the completion, and only the enhancement for which will need a smaller amount of expenses to be incurred. So combination of this, I think we see a significant drop down after first half.
Okay. The next question from my side is that what would be contribution from MSME over next year?
MSME contribution. So if you see, the MSME will continue to grow in the pace of about 15%, and gold loan will increase in the pace of about 30-35%. Home loan will also increase over 30%. So this is how the pace will go for the coming year.
Okay. So one more thing I want to ask is about demand about the rural automobile loan sector.
So we are in the new car loan distribution business. And if you look at the new car market is growing with the pace of economy, it is growing at about 10-12% every year. But we have set up the distribution across about 800 with the people, about 750 locations pan India with the either help of our DST network or with the DSA network. So our car loan business per se will increase about 20%.
Okay. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We'll take our next question from the line of Professor Ajit Kaushal from GD Goenka University. Please go ahead.
Hi, good afternoon, sir. And first of all, I would like to congratulate the entire team for successfully taking the company ahead. My question, a part of my question has already been taken. Hello, am I audible?
Yes, please.
Yes, a part of my question has already been taken by one of the participants here. My question is related to gold loan, its valuation and auditing. So I heard the CFO explaining about the valuation of the gold loan. My question is that once the valuation is done, so after that, what is the system of assessment and auditing at a higher stage?
I will ask my colleague Sanjeev to explain this.
Very important question, a good question to ask at this juncture when there is so many regulatory aspects going on around this.
Yes.
Basically, each of our branches is equipped by 5, where 3 of them they know and understand how to value a gold. They have the competence of valuation. And if you look at our process, each gold is valued by two of the valuers. So there is a maker-checker control in the system built in. And both of them have to put their approval authority into the system through their user ID. So that takes care of that if there is any collusion or there is a lapse which can be taken care of. Now coming to the audit piece of it, we have a trained audit staff of 100 people who are responsible for auditing every gold which we have underwritten on a regular basis. In addition to that, we have also deployed some AI/ML triggers on the system, and we have built some 35-watt triggers, which gives me an early warning signal on this valuation. In addition to that, what we have also created is called a cross audit or a surprise audit. So cross audit happens in the way that suppose there is a rotation of auditors, then there is like if something is a particular branch is audited by X employee, then my team from the west will suddenly go to north and do the audit. So these kind of controls we have built in. Otherwise, we can proudly say that we have actually 100% of my packets of gold has been audited by my internal team.
Okay, that's great. Sir, I am fully satisfied with your answer, and we have total trust in your managerial system. Would you like to talk something further about the technology which you are employing for the purpose of valuing and assessing the gold which has been submitted for the gold loan, if there is something?
For assessing the gold loan, there cannot be any technology as such because you have to physically touch the gold, use all the various methods of either putting the chemical or cutting it or using some machine to do that. So it has to be done manually. Assessing the gold cannot be done with any kind of technology.
Okay. Thanks for the answer, sir. It is really helpful.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have a question from the line of Gaurav Sharma from HSBC. Please go ahead.
Thank you for giving me opportunity again.
So just one question on NIM outlook. So you mentioned that the cost of fund has almost peaked out, and your other income and the yields in gold loan business will also improve or increase. So can you please give a NIM guidance for FY25?
Guidance on?
Net interest margin, sir.
So as you know, the net interest margin is still, the more the leverage will happen, net interest margin will continue to go down. So I think that may not be a right indicator always. Right indicator is always spread. Currently our spread is in the range of about 6.4%. As I said, since our gold loan proportion is increasing in the overall AUM, our spread will improve from 6.4 to, it should improve to in the range of about 6.8, 6.9. And that is where our margins will further improve. So assuming that we are able to achieve a significant hike in the gold loan business, it will continue to improve. Now it improve 300 basis or 400 basis, that will depend on how gold loan AUM we are able to close by the March.
Got it, sir. Thank you so much.
Thank you. We'll take a follow-up question from the line of Aman from Dolat Capital. Please go ahead.
Yes, sir. Just a data keeping question. I wanted to know the BT's number regarding gold loan and affordable housing, if you can share for this quarter and previous quarter and for the year.
That number may not be readily available. You can separately contact us and get us after a week.
Yeah, sure, sir. Thanks.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments. Over to you, sir.
Yes, sir. Thank you. So thank you for sparing time and showing the interest to know more about us. So as will continue to grow our secured lending business, and we are all in the sector which are the very, very high growth, keeping in India's economic growth and the way that our economy has affected the momentum across rural and semi-urban areas. We will continue to grow our book in MSME, home loan, gold loan, and construction finance side. And our fee income from the car loan and the insurance income will also significantly contribute. Co-lending is another space where it will give us a good amount of fee income because we do not put any capital but just originate, underwrite, and collect. So that model will continue to grow. Collectively, we see 2024-25 will be a year which will define us the way we process our entire end-to-end loan processing. Being property involved or the security involved where legal valuation technicals are done, I think this is the piece we have cracked which will put us in a very unique position. And this will result in lower tax and better productivity, resulting in ultimately the lower cost to income ratio. So with this, I will say this year we'll see a good high growth along with the lower cost to income ratio compared to the last year. And we should see some good numbers coming in.
Thank you, sir. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.